So thanks everyone for joining tonight. My name is Carmelo. I'm a mortgage broker. We're here tonight with a special guest, Michele Newton from CMLS Financial. She's a business development manager. She's going to explain a little bit more about who she is and her role. And I'm excited to learn about tonight's presentations and Michele's insight with today's market. Alex, you want to introduce yourself?
Yeah, for sure. Michele, thanks so much for connecting. This is like really special because we actually have, a specialist from their industry. It's not just going to be me and Carmelo, but you're going to kind of get the, kind of like the information right from the figuratively speaking horse's mouth. My name is Alex Jwanansky. I'm a realtor with Remax Condos Plus. I work in downtown Toronto and in the greater Toronto area. And yeah, this presentation is it's not so much about real estate, but it's more about the kind of the lending side and all the things that go into actually acquiring real estate. So with that, I'm going to mute myself, and then, we can let Michele share her screen and take it from there.
Excellent. Well, I will put my screen up now and introduce you to CMLS Financial, as well as, talk a little bit about some of my experience in the market. And we'll do a quick little market recap so that you can get a sense of where real estate's at today, and is this a good time to buy, and all those burning questions that you have. So just a little bit about myself. My name is Michele Newton. I work at CMLS Financial. I've been in this industry for just a little over 20 years, and I've done quite a lot. I've done the A side of business, the B side, which is a little bit off of the the really high credit levels, or when deals get a little bit different, non-conforming. That's the B side. And I've also been a mortgage default insurer. I'm sure many of you have heard of CMHC. I've done that insurance as well. So because of all this experience, I do have some product knowledge, and I know a little bit about trends and regulatory guidelines as well. And what I do is I help people like Carmelo find solutions for people like you who are looking for new homes, or looking for solutions with the home you currently have, so that you can save money and maybe save up enough for a down payment on an investment property or something like that. So the reason that I do well in this industry is I partner very well. So I make sure I align myself with really intelligent people like Carmelo and Alex, so that together we can put you in a home, and a home that you love. So what I'm going to talk a little bit about today, of course, I'm going to talk about my company, CMLS Financial, but I'm going to let you know a little bit more about what's the difference between a CMLS, for example, and a bank like a CIBC, just to use some letters for you there. Because we all do sort of the same thing, but a lot of people wonder, is it safe to use one of these mortgage finance companies? So we'll talk about that. We'll do the housing market update. And then the how can I buy a home part is just some options that you should look at when you are looking for properties. So CMLS Financial, we are what you call a mortgage finance company. We've been in business over 40 years, and we do everything from commercial to residential. We actually started as a commercial company. So we're a very large commercial lender, but we are also a large residential lender as well. We've got offices across the country. We do a little bit of everything on the residential side, meaning we do mortgages, we've got lines of credit, and we're always looking for different solutions to offer to our customers. This is a snapshot of everything that we do. So everyone does a purchase when you're in mortgages. We refinance properties as well, but we have switches. If you're moving from one lender to another without taking out money, the home equity line of credit is a very popular way to access your equity. We can help you buy a second home if you want to buy a cottage, or if you want to buy a house for your child to live in. If you're new to Canada and you haven't got any established credit, we've got ways for you to buy as well. So really a little bit of everything in the mortgage market you can do through CMLS, but it's all a matter of finding the right representative who's going to give you all of those options as well. So mortgage finance company, all we do is we provide mortgage financing. A fairly simple thing when you think of the title. They used to call us monolines because we had one line of business. We did mortgages only. But because that's all we do, we're extremely good at it, and we can offer you better rates. When you go to a bank, the person that you talk to at the bank, definitely a jack of all trades. You know, they do a lot more than I do. I don't know anything about credit cards or savings accounts, but that's what your financial advisor at the bank, they need to know that, plus investments, and they also do mortgages. So they don't really get the opportunity to become experts. When you're dealing with a mortgage expert, obviously you're going to get the best possibilities for products that are out there. And the way I like to put this in perspective for you is when you go to a bank, they're going to give you what fits you, because they're going to tell you, this is what I have that you fit into. So let's say you went to buy a car and you've got 5 kids. So you really need a car that's going to seat 7 people. Well, if you went to BMW and they don't have a 7-seater, they might try to put you into an X5, which is probably their biggest SUV, but that's not really ideal for your 7-person family. What you really need is to go to Infinity and buy the QX70 that does have that 3rd row of seats, but BMW is not going to tell you that. They're going to tell you, this is the biggest thing we have. It'll be perfect for your family. Y'all can cram in here. Well, that's what happens when you go to the bank. They're going to say, this is the best mortgage we have for you. But when you go to talk to Carmelo, Carmelo says, well, that actually doesn't fit into that bank product. He has access to CMLS and all the other mortgage finance companies out there, and there are quite a lot of us. And that means that when you work with a mortgage broker, especially a good one, you're going to get the option that fits you instead of trying to jam you into the option that they have. So I think that it's a wise decision to, like I said, I'm successful because I line myself up with great professionals. Definitely line yourself up with a great professional like Carmelo. So let's talk a little bit about the housing market. Now, all of these numbers come from the Toronto Regional Real Estate Board, right? So these are not my numbers. These are the Toronto TREB is what they call it, the TREB numbers. And we're going to talk about numbers that are for the GTA as a whole, but we will drill down a little bit and talk about some specific regions as well in terms of pricing. But I think this is really key. It's a very confusing chart. If you look at it, you might think, what the heck am I looking at? There's a couple of lines that I want to draw your eye to. This is the number of sales. So this green line here, that was 2021. We were very busy in 2021, and we hit a peak where there was a month where there were almost 16,000 sales. Well, let's just drop down to this thick green line down here. We definitely have slowed down in number of sales. You've heard that through the press. They say that the market has crumbled. Oh my goodness, is this a good time to buy a house or not? Why did this happen? Well, if you've been paying attention, rates went up 6 times last year. When I say rates, I'm talking about the prime rate because that kind of sets a benchmark for everything. I would say rates went up a lot more than 6 times last year if you're just talking about fixed rates as well. But with those 6 prime rate increases, we saw the rates go up so much that it essentially put the brakes on the market. So if you're looking at the thick red line here, this is 2022, which was a slower start than 2021. But when rates started to go up, the number of sales just started to plummet, if you look at that thick red line. So here we are in the lowest number of sales ever. Pretty much ever, except for the big dip during pandemic. That's what that like, oh, we're doing well, and boom, we went way down. Now, the reason this chart goes back so far in history is because there's a couple other years you should look at. This blue line here, 2017, this was the year they told us that our market was done, because this is the year we introduced a new rule. We introduced the stress test in 2017. And so we were doing really well in number of sales. The stress test came in March and sales plummeted. Well, what I think is really key to look at here is every time something happens, whether it's a regulatory change or a massive rate hike, it takes us about 6 months until we catch our breath and start to figure it out again. So we're still in the climbing mode because we haven't caught up to some of the previous years where we had tons of sales, but that's all a factor of those rates as well, because people selling their houses want to sell at higher prices. Now, why would they not be listing their houses yet? Well, here's the average sale price. So this is normaler down the bottom here, normaler, not the normalest, obviously, but this red line up here, this is the 2022 sale numbers. And every time you hear in the press that sales have plummeted, they're talking about from the peak. But if you look at all of this, we were never supposed to be here. This is up in the stratosphere compared to where our pricing should have been. Like this is 2020 when we had the pandemic, the gold line. We took a little dip when everything went down and everyone got scared, but it came right back up. But 2021, for some reason, land of milk and honey, rates were low. We were trying to really stimulate the economy. Everybody bought. And then when they knew the rate hikes were coming, everybody tried to buy as quickly as possible, which drove all the prices up. So you heard all the talk. Everything went to multiple offers. Things were selling 200,000-300,000 over ask. And that's just on the norm. Things were selling 500,000 over ask in some places, which really doesn't make sense. But I would tell you there was a lot of fear of missing out up here in the peak. So my thoughts on where prices are going to go and where number of sales are going to go, we're starting to catch up. So I don't think that we're going to overtake May of 2020, but I think we'll overtake June of 2020. And as soon as that happens, you'll hear it in the press. Per month sales were equal to last year, or if they're up year over year, well, that's going to spur a lot of buyer sentiment. Everyone's going to think, I better get back out there because there's no more sales for me now. If I don't buy now and prices continue to go up, never going to have an opportunity to buy. The flip side of that is that people who want to sell their houses, well, you know, everybody wants to sell up at these prices up here in 2022, right? But those aren't realistic prices. So I think that once we catch up to it, you'll see a lot more buyers list their homes. So you'll see a lot more product on the market, which will really invigorate the market. But that means, you know, not that we're not already back in multiple offer situations. Most real estate agents will tell you that the multiple offers are back, but mostly because there is so little for sale. And don't forget, when we're talking about multiple offers that have been happening for the last couple of years, those are people who've saved down payments and are ready to buy. They didn't just pack up and go away. They need a place to live. Alex?
Yeah, and just a little bit about the multiple offers. Like, you know, when the prices are being listed not at the market price of the property, there will be multiple offers drawn, you know, naturally from that. Like the listing price is very much just become a marketing tool now. It's not like I saw a property listed in Oakville for $1 like a month ago. It sold for $2 million. But yeah. Great points. This chart is great, Michelle. Thank you so much.
Thank you. And I bet you that $1 sale, when they sold it, they put on the sign that said sold over asking.
Everything is over asking.
Yeah. So don't be fooled by that because it's about properly priced product on the market as well. A low listing, you know, a house in my neighborhood was listed at $899 and sold for 1.2. Well, it's probably worth around 1.1. But by listing at $899, they got a lot more interest and drove that price up an extra 100,000. So again, it's you have to not only align yourself with a good mortgage broker, but definitely you need to align yourself with a good realtor, right? Because Alex can tell you what a property is really worth, not based on just the list price, but on all the comparable sales that happened in that same area. And that's one of the funny things about our business is a house is worth what someone pays for it. That's really the value of a property. But when you're getting an appraised value, for example, that's based on everything else that's sold within the last 90 days in that area. So, you know, it's all kind of relative to what's happening in that certain zone. So just because you see something listed at a really good price, you should reach out to Alex and say, hey, should we go see this? And is it a good price? And Alex will tell you what stuff in the neighborhood is selling for and whether that makes sense or not. So definitely having a good team is what it's all about. So, you know, try and think about this as you see the numbers come out over the next couple of months and you hear it in the news. Are we going to catch up to 2022? And are we going to overtake 2022? Because I think that's going to start our next real estate frenzy. So this is specific to condos. And again, this is condos in the entire GTA. So it does include everything from from like Oakville to Oshawa, goes up to Georgina. So you've got a lot in there. Obviously, you've got the really high price downtown markets that are driving the prices up, but you do have smaller markets that are bringing the prices down as well. What I think is also relevant here is, of course, our yellow line is stratospheric because 2022 was such a big year. The same as with all the other different property types. We peaked and then started to slow down, but you see a little bit of pickup towards the end of the year because condos are such a great place to start. I don't think it's just a starter home when you buy a condo, but back in the old days, we used to talk about the property ladder where you would buy into the market and you might have to buy a starter home. And then, as your family grew or as your income grew, you would buy a bigger home and then you would buy a bigger home. Well, a lot of people decided that they didn't want to go through that because, my goodness, I don't want to pay Alex every time I buy a house, for goodness sakes. So I want to just go right to the end. I'm just going to buy my forever home right now. Not the most realistic thing in the world because you just don't know where you're going to be in the next 5 years. But it also just may not be the best investment for you at this particular time of your life. So I am a firm believer in the condo market because not only is it a great stepping stone, but I believe it's a really great place to build equity. Because building your equity when you buy that home means that your next step will be much easier because you'll have a bigger down payment to put down on it. So we're sitting here, a little bit below last year, but that also tells me that we still have a lot of very reasonable price properties. It's going to take a little while for us to overtake the condo market, I think, in terms of month-over-month values, but we will be overtaking 2022 at some point in terms of values. And this here just breaks down by certain areas, just so you can see that, just because the last slide said that your average sale price was just a little over 700,000, that doesn't mean that every condo in the GTA is going to be over 700,000. So, Mississauga 614, Brampton 564. These are all very reasonably priced properties. If you want to go to Oshawa, you can buy a condo for 453,000. You're still on the GO train. You can still get to downtown very easily if you work downtown, but not everyone even goes into an office anymore. But we used to joke that when the market's high, you have to drive until you qualify. So, sometimes it takes going a little bit further out of the area you want to buy in right away, just because you need to buy something that you can afford. Pretty much everything in the GTA has continued to build value. I don't think our market is ever going to be a place where the demand has stopped. Every year they talk about we're going to let in 300, 400, 500,000. The number keeps going up of the new immigrants that we're going to welcome to Canada. And most of the new immigrants who come to Canada are in what they call the economic class, meaning that they're going to come here and they're going to start working immediately start contributing to our economy, but also immediately need places to live. And so with that kind of a demand every year, not to mention all of the people who already live here who are looking for, maybe to get out of a rental or maybe to take their next step in terms of purchase, that demand will always keep our market strong, which means that the next time we talk about the average sale price, it should be a much higher number. We have a question for North York sale prices, and definitely we can take a peek at those and let you know some of the North York prices as well. But I'll keep going for now, and then we'll loop back and get you some North York condo prices. Now, everything on this list was, the list is extensive. The GTA is very large. I wanted to pick sort of a range of areas, but also a range of prices. So you could see that, we really do go from 450,000 up to 900 and some thousand. Of course, you can buy condos well into the millions as well, but the affordability is still there if you're willing to go a little bit maybe out of the area that you originally thought you wanted to buy in. So how do you afford a home? Do you put down the minimum down payment? Do you put down 20%? What does that all mean? And default insurance, when you buy a house with less than a 20% down payment, you don't have a choice. By law in Canada, you need to pay a default insurance premium because there's no lender that's going to lend to you over 80% unless that loan is insured. And that insurance means that if you don't pay for your mortgage, that lender, whether it's a mortgage finance company like CMLS or a big bank, we get that money back from the insurer. So it's not that it's a no risk product, but it's a very low risk product. And that's because you're less invested, so the risk goes up on that. So that's why you have to pay that premium. Do you want to put the minimum down payment down? Do you have enough to pay more? Obviously, the more you pay, the less premium you have to pay. So scenario 1 is the minimum down payment. Now, does anybody know why it's 5.83% and not just 5%? So I'm sure the minimum down payment was 5%. Carmelo knows. That's a good thing. That's a very good thing. The minimum down payment is actually 5% of the first 500,000 and 10% of any portion beyond 500,000. All right. So it does go a bit, beyond the 5% if you're over 500,000. So in this scenario, the minimum down payment was 5.83%, which comes out to just under $35,000. So if you've only got $35,000, which is a lot of money, so it kind of makes me chuckle when I say something like, you only have 35 grand, that would be a minimum down payment, which means on a $600,000 purchase, you would need a mortgage of $565,000. That premium that I mentioned, that gets added to the mortgage. So you're not paying this $22,000 premium out of pocket. And that might seem like a lot of money, but you need to divide that by 300 to find out what the monthly cost of a $22,000 premium is. Let me do that right now because I probably should have done that ahead of time. But 22,600 divided by 300 would give you $75 a month. So for an extra $75 a month on your mortgage, you could get into the market a lot faster. When you think of it that way, it's not that scary. Default insurance applied to a second home if you pay yes. Anything you buy, you can only buy a primary and a secondary home insured, because if you're buying an investment property, that is always going to be a 20% down payment. Right? That's the minimum down payment for a rental. But if you were buying a second home, which would be, let's say you want to buy a cottage because you like to get away in the summer, or even if you had a very good financial situation and you wanted to buy a home for your child to live in when they went away to university, that could be considered a second home as well. And that's also considered owner occupied because a member of your immediate family will be living in it. So yes, that would also need to be default insured, and it's the same rules that apply. An investment property would be something that you're investing in to make more money, like a rental. So you buy a condo and you decide you're going to rent it out. That would be an investment property. Minimum 20% down payment required. Okay. So in these scenarios, it just shows that the more you put down, obviously the lower your premium is. And as soon as you put down 20%, you'll see there's no premium applicable. And I did these all with the same rate, which is my current best rate for a 5-year mortgage. And these are your payments. So the more you put down, obviously the lower your payment goes as well. So it's a great way to think of how you can manage the life of your mortgage. Sometimes it makes sense to put down some less down payment so that you pay some default insurance premium. Like when I bought my house, we could have put 20% down, but we decided that if we put down the full 20% to avoid paying the premium, that would have made us cash poor. And I needed to do a couple of things when we moved into the house. Like we had to put up a fence because I have a husky. Actually, I have 2 now, but I wouldn't have a husky anymore if I hadn't put the fence up. So that's a good cost there. So we figured out that we put 15% down, which again lowered the premium that we would have to pay. But by paying an $11,000 default insurance premium, I saved myself $27,000, which meant that was money that I had to get my house set up the way I wanted to. So it's a great thing to discuss with Carmelo when you're looking at what the options are. I have this much down payment. Should I put it all down now? Is that going to put me in such a good position that, my life's going to be better for the next 5 years, which is the term of the mortgage? Or would I be better off to save some of that? It's going to increase my payment a bit. You can see it by the monthly payments, but these are all just strategies to think about what can you afford to pay? What do you want to afford to pay? Because that's something you should set yourself up for as well. And then just understanding it's not like you're throwing away money when you default insure. There's a lot of people who think I need that 20% because I'm going to waste my money if I do this. I don't have $22,000 to pay in insurance. But think about the fact that prices are going up. They generally go up. So the longer you wait to save your down payment, well, the longer you're going to have to wait because those prices are going to keep on increasing. So sometimes it makes sense to rip that Band-Aid now, jump into the market, start building your equity. Because equity, I think, builds faster than trying to save a couple of dollars every month in your bank account to build up a bigger down payment. So just strategies that you should look at that are going to help you get into that market a little bit faster. So I like to always throw a nice quote into everything. It takes just as much energy to make a wish as it does to plan. So wishing to have that house isn't really going to get you there. But I think using that energy properly and putting out a good plan, that's going to get you into the house of your dreams. Any questions?
Thanks, Michelle. That was an amazing presentation.
That
Thank
was really good. And it reminded me of something when you used that car example of going to BMW and they know you need an Infiniti.
Mhm.
Like, I remember when I was trying to take equity out of a property and use that as a down payment towards buying an investment property, my traditional lender told me that's not possible to do that. Like, and basically, like, they had no solutions for me. They tried to, fit me into other solutions, as in, like, finding 20% somewhere else. And yeah, it's actually took me a while to realize that it was possible, and also it was just like time that I spent. So yeah, it's definitely great to use a mortgage broker, as opposed to just going to the bank that just has one product for you. So we have, is this a question from Deepak? Great information. Is there a way to invest into housing real estate without buying a tangible property like stocks? So, I mean, I think that the whole benefit of investing in real estate, Deepak, is the fact that you have a tangible asset. Like, there are like rate products and other products out there, like if you're looking to have fractional ownership, but at the end of the day, like, when you buy real estate, it's a commodity. It's also just like a basic human need: food, water, shelter. So it's something that's always going to be appreciating, something that's always going to be in demand. So I'm not sure if I'm answering your question or not, Deepak. If I didn't answer, please. I see you turned on your camera here, so go ahead and ask your question.
I just wanted to clarify. Thanks a lot, Michelle, for the presentation. It was great information. But the question I had over here is, for someone like me who is mostly like leading a nomad life, I don't want to buy my own property because I gotta maintain it. But I would like to have a piece of property, but that is managed by someone else, to make sure that I have my assets growing up in value. So I was thinking, is there a way where, like, I've heard about property managers over here, but is there something like a piece on paper that I can buy, but I don't want to maintain it, but I want that piece to be appreciating? So is there like a realtor, or is there a class of realtor who deals with this? Yeah, I don't know. So I'm just asking.
Okay.
I'm thinking maybe you could always buy, if you're looking at buying investment properties, you could always use property management to manage the property, work with your tenants. Alex, I think you have some experience with that, right?
Yeah, I do. So also, Deepak, I do have a webinar that's going to be on June 6th, where I'm going to be talking about my experience investing in Alberta real estate and talking about some of the opportunities available there. And that's a product where you can get into a much higher price point, into a cash flowing property, and it also includes free property management with it. So, that's a great way to be able to get, ownership of real estate, but also just having somebody remotely. But like, I have properties in Alberta, I have property management. Property management is usually about 6% of the monthly rent, 6 to 10%, and they usually charge about, between half the rent or a full month's rent to find you a tenant. There are also real estate agents that offer these services, but they need to be licensed as a property manager if they're going to be, offering that commercial. But Deepak, what I'm going to do is I'm going to share our links in the chat. So if you want to find out more about this, feel free to book a call with us. Also, our Instagrams are in there. Mine are Carmelo's. I encourage you to follow us on Instagram. And also, if you're looking to get into a hands-off property, I think there's some really good opportunities out there in Alberta. Like you can get a condo in downtown Calgary pre-construction for the low to mid 400,000s with a 10% deposit until completion in 2027, 2028. They come with a 2-year rental guarantee, 2-year free property management, and only a 10% deposit until you go to get your financing. So yeah, Deepak, thank you very much for that question. Michelle or Carmel, is there anything else you guys want to add to this?
Michelle, again, that last comment when it comes to like the CMHC premiums, I could kind of relate to that because I was looking at buying my first home and having a European background. I was born. It's like, no, you have no mortgage. Then it's like, okay, you have to put 20% down because we don't want to pay these extra fees. And I learned, you know, as I was waiting, trying to save that money, the market prices were going a lot faster than I could save. And if I would have just bought my first home with that 5% down payment, when I had that money plus closing cost, I would have saved myself thousands of dollars in having money needing to save for down payment. Plus, I would have purchased it at a lower price. Plus, I would have had a smaller mortgage. Like there's the combinations of things and the advantage of using, I'm buying a property with less than 20% down payment. I learned with my own experience by having a bigger mortgage than I probably should have. You say more of my savings than I should have, but at the end of the day, it worked out. But I wish I knew this back in the day.
When you look at your property purchase 5 years down the road, like all these little things that are going to be, you know, minuscule on the grand scheme, like when you're factoring in all the appreciation, somebody else paying down your mortgage, you know, the opportunities that you create for yourself as well. So, you know, one thing that really spoke to me in Michelle's presentation was, you know, when you get into property ownership, and you're able to qualify and buy that, you're setting yourself up for the future. You're going to make it easier for yourself to get that next property. So I think the key is, you know, not waiting for necessarily the perfect timing or the perfect moment or trying to plan it. It's about taking action. And you know, when you reflect back on these decisions, you know, 4, 5, 10 years down the road, like you're going to be very grateful that you did that. Okay, do you have a listing for properties in phase 1 or pre in Ontario? I'm not sure what that question means, Cedra.
I think it's, do you have access to any new construction projects in Ontario?
I have access to all of them. But you need to be more specific, Cedra. If you want to book a call with me, there is a Calendly link there, or you can send me a DM on Instagram if you can maybe share a bit about, you know, the type of property that you're looking for. I can send you some options for new construction or for pre-construction for that as well.
So that was excellent. I was wondering if anyone else has any questions for the three of us.
I'm just looking up the North York condo prices really quick here to see. Someone had a question
Awesome.
about that.
Yeah, that was Karen, I believe, had that question.
So, oh, and I should point out too that those numbers were condo apartments specifically.
Okay.
I had there, and you wanted to know in North York. Well, York region itself is 715. Sorry, I mentioned I had huskies. They talk, so you might hear my husky talking a little bit in the background.
Yeah.
Actually, Michelle, can you help me out with well, you had the one slide that talks about the real estate trends, the number of units that sold.
Yeah, let me go back to that.
And also, when you're looking at the condos, what is the size of the condos? Like, are they all?
That slide, Michelle.
Yeah, it's just all condo apartments.
Okay.
So it's a really broad, like, you know, we are talking the micro condos that don't even have a bedroom or a full size refrigerator to the penthouse suite. Everything's included in that number.
Cool.
So I noticed with this chart, Michelle, that every spring, January, February, March, April, or like there's kind of like it shoots up, then it slows down, and specifically in November, December, it always drops. Every year, the cold weather's coming, nobody's buying, nobody's selling.
We haven't been following what I call the normal curve for a couple of years, but you do see that it builds up into what we've always called the spring market, right? Because, you know, it's too cold in January and February. Nobody wants to list their house and no one wants to go out and look at houses. So we build up into here, and then we slow down in the summer because everyone's on vacation. And then we build up a little bit in the fall, and then it slows down again towards the end of the year or the holidays. So it tends to be that same curve. It more or less even follows it in the wonky years, where you build up and then you drop down and build up again. It is the normal curve. When you're buying in this area, this is where everyone is buying, but that's where the most houses are listed. So it's like, do I go when there's more opportunity, but there's also more competition? Or would it be better to buy in the summer where there's maybe a little bit less for sale, but less people looking? That's basically, this is the curve, but it's Alex who's going to be able to lead you into when the best times to look at, but also talk to you about when the best opportunity for that thing that you need is available.
Yes.
I like this chart because it really kind of defines like the number of transactions that happen and the seasonality, because January, February, December, and January are the coldest months of the year. Nobody wants to go out. December, everyone's getting ready for the holidays, taking time off after a long, hard year. So it's really puts into perspective.
Yeah. And so Karen mentioned also she's looking for a 2-bedroom, 2-bath condo, apartment, or townhouse, having some challenges. Yes, Karen, definitely just book a call. And we can kind of discuss what's happening. Sometimes by yourself it's it's easier when there's somebody who's doing this. Basically I'm in this full time all day every day, right? So it's I can definitely assist you with this. So when you're ready, book a call if you have any questions or you need any help with that.
Yeah, and I would say for those condo prices, Alex is going to do a better job on that, because I'm just looking at the TREB numbers, and everything within the GTA proper or Toronto proper is broken down by CO2 and CO9. So I'd have to find the exact spot in order to give you those listings.
So we got a good question. Lovelet, would there be an average yearly equity for a 1-bedroom condo in Toronto? I know, Alex, in the previous presentation, we showed a chart over the last, 20 plus years.
Yeah.
And the
5%.
average real estate prices in the Greater Toronto area would go up around 8%.
Yeah.
So the equity is the difference between the value of the property subtracting the mortgage on it. So if for example, if the property today is 500,000, and I can't say we're going to keep that 8% trend, but let's say it goes up that 8% between now and next year, you got an extra 40,000 equity in the property because the value of the property is 40,000 more than it is today. And at the same time, you're also paying down that mortgage for 1 more year.
I would focus more though on the equity after 5 years.
Yeah. Prices are not going to go up and appreciate the same amount every year. But consistently, if you take any period of time after 5 years, you're going to build quite a bit of equity.
Yeah, the scenario, remember, Carmelo, that we use in our renting versus owning presentation, I think we do a $600,000 condo, and after 5 years, they're they've accumulated $240,000 in equity with appreciation and paying down their mortgage and all of that. Like that's like having, a second full-time job.
Yeah,
you don't have to attend.
And then I remember we used more conservative numbers. You saying that the appreciation was just 5% per year, not compounding, just the same 30,000 every year it appreciates.
Yeah, in some years we have these big bumps. So, I mean, like usually, what it is, it's like good times, bad times. So like everything is cyclical, right? So we had this big jump in last year around February, March. While the interest rates were still very low and people were trying to get in. I mean, right now we're in a high interest rate environment. What's going to happen when, interest rates go down to more of kind of like, what we've been used to seeing over the last 10, 15 years, right? So, when we say 5 to 10, we think that it's quite conservative. And also keep in mind, we also do have a 2-year foreign buyer ban right now in place. What's going to happen when all those foreign buyers can enter the market again?
Yeah. The market's constantly changing. There's no in real estate, it's not really an average, but if you hold it, real estate's a long-term play.
Yeah,
it's not about trying to time the market. It's more about time in the market.
It depends on what you're buying for as well, right? Like if you're buying that investment property, that's a bit more of a gamble because you have to get enough rent to pay that mortgage. Whereas if you're buying it to live in it, well, that's the best gamble of all because it's just going to continue to build equity. Like You know, if we're talking about that 5-year equity trend, let's imagine that you bought in the purple line. So you bought for 750,000. Well, even though, you know, the news has told us how prices have plummeted, you wouldn't be crying if your property was worth $1 million today, right? So
No, that's
you have
not
to think about it in those terms.
Amazing. Thank you, Vlad, for
Michelle,
the
thanks.
question.
Yeah,
Great question.
Michelle, I want to thank you again for joining us tonight with your presentation. I love your presentation. I want to also thank you for working with you. You're an amazing partner to work with. A lot of my clients love CMLS and having mortgages with them. You offer great service, great interest rates, and even customer service with, you know, whenever they want to call in and have questions. And you also have a portal, I believe, when it comes to like logging in and accessing your mortgage online. So my consumers love that, the fact that they can just log on, don't need to wait on hold for a customer service representative. For you guys have like pretty short wait times, and it's just you're a fantastic partner to work with. So thank you.
I appreciate that. Thank you very much. And thanks for having me on tonight. It's always a pleasure to talk about the market. You will notice that with different people that you talk to, some people get excited about it. Like every time Alex or Carmelo spoke, you could see there's a big smile on their face because this is the stuff that drives us.
Yeah, amazing. Michelle, this presentation was great. Thank you so much for all this info. And yeah, I looking at these stats and the way you present them, it's great. Thank you so much. I'm going to stop the recording. I think we don't have any more questions from the floor, right? Anybody else have any questions? No. I guess okay. I guess we're done, right, Carmelo?
Yep. So thanks everyone for joining us tonight. We're going to have another presentation next week. So follow us on Meetup, and if you have a moment tonight or tomorrow, if you give us a review on Meetup, so other members could see and learn about our presentations as we do weekly presentations.